It is time now for us to take a look at the day's top business news stories. I'm joined for that by our business editor, Stephen Carroll. Good morning to you, Stephen.
Hi, Catherine.
Now, we're going to be starting off with a story that I'm pretty sure pretty much everyone heard about for the last few days. British Airways having enormous computer troubles, apparently returning to normal today.
Yes, the airline says its IT services are back up and running after the massive outage, and it hopes to run a full service from London's Heathrow and Gatwick airports today. But it's warned that it may take some time to return lost bags to passengers. At least 75,000 BA passengers were affected when the airline's IT system was hit by a power surge. Goodbody Stockbrokers estimates the outage will cost BA more than €80 million, or around 3% of its profits for this year. Problems will also hit the company's finances hard at a time that it's returned to profit after years of cost cutting. The GMB union is pointing its finger at those efforts as the cause of the IT problems, the company denying that, though, saying that the data centre that caused these problems wasn't one that had been outsourced.
All right, well, whatever the cause, certainly disruption and worries continue for a lot of people. What about shareholders, though? How's the share price been bearing up?
Now, London stock market was closed yesterday, so today is the first reaction we're seeing on IAG, which is BA's parent company's share price. It's down 4% in London at the start of trading, so investors not too impressed with those problems. We had gotten some indications already on the trading in Madrid yesterday. IAG is listed there as well. Shares there were down almost 3% on Monday. Across the European markets this morning, we've got falls in London and in Frankfurt. That figure for the Paris CAC 40 is wrong. The Paris market starting down nearly 1% at the start of the trading day. Today, over in Asia, things looking a little bit quieter. Shanghai and Hong Kong are both closed today for a holiday. We've got some small falls on the Nikkei in Tokyo and on the Kospi in Seoul.
All right, we're going to look to Greece next. The finance minister there saying that international lenders need to come up with some cash.
Euclid Tsakalatos says that Athens has met all of its obligations and that there were no excuses for its creditors not agreeing to a deal on debt relief. Greece needs Eurozone finance ministers to sign off on the next instalment of its bailout loans at a meeting on the 15th of June. Without that money, the country will be unable to make debt repayments due in July. Now, Greece's international lenders, the IMF and other Eurozone countries, have been unable to agree on a deal to make the Greek debt mountain more sustainable. Mr. Tsakalatos telling journalists in Athens that exiting the bailout should be the responsibility of the creditors as well as the Greek government. He says, "We've done our share of the deal. It's up to our creditors and the IMF to do theirs." A look now at some more of today's business headlines for you. Ryanair says it's focusing on new routes in continental Europe as the UK prepares to leave the European Union. The Irish airline reported a 6% rise in profits to €1.3 billion for the year to the end of March. The carrier says that it's facing a lack of certainty or direction about Britain's relationship with the European Union and how it will affect its business. Shares in the Indian telecoms giant Reliance have fallen again in trading today by almost 3%. This after reports the company had defaulted on some interest payments. The shares also saw a massive drop on Monday, wiping almost €100 million off the company's value. On Saturday, Reliance had revealed its first ever annual loss as competition has been heating up in India's telecoms market. The troubled lender, Italy's Monte dei Paschi di Siena, says it's in talks with a hedge fund to sell off some of its bad debts. The world's oldest bank had to be rescued by the state at the end of last year after it failed to raise private money to fill an almost €9 billion funding gap. It's now in the process of selling €26 billion worth of bad loans to shore up its finances.
All right, just time for one final business story from Stephen. Stephen, you got a story for me that I don't personally understand. It's about Sweden. It's about Airbnb. Take it away.
Essentially, imagine as if the entire 10 million Swedes decided they were all going holidays at the same time and they wanted you to look after the place while they were gone.
Okay, interesting concept.
Close. This is an effort to promote the country's freedom to roam principle, which allows people free access to all publicly owned land, meaning you can take your tent and pitch it pretty much wherever you like as long as as it's not in someone's back garden.
That was my question.
The campaign was designed by Sweden's Tourist Board in conjunction with Airbnb. Now, the site suggests a number of locations, including a rustic forest retreat and a rocky island in the Stockholm archipelago. It adds that these sites are available 365 days a year, have unlimited beds, and the check-in time is whenever.
Oh, I like that. Nice and cash. Just whenever you like. Thanks very much, Stephen, there with the business news.